Oh, fuck. What the... Ugh! Fucking shit, Josh, you fucking idiot. Oh shit, am I on the air? Whoops. Oh, god damn it. Alright, Mike. We're gonna go live here in a minute. All right. Sorry, I just had one of my positions go ballistic in my favor. So let's start the webinar. 12 o'clock. Let's do it. So first, quick disclosure. I am an associated member of T3 Trading Group, an SEC registered broker-dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Just a position disclosure. I actually closed that Uber short, so that that Uber short is no longer relevant. That position is closed. So just quickly about me, I have been trading with T3 Trading Group since 2011. I was with T3 Capital before that. We did a little name change apparently in 2011. So actually, let's see here. Later this week is my 10-year anniversary with the company. So I've been with T3 for 10 years now. I have mentored over that period of time well over 100 traders. I started as just a trader with T3. I was an entry-level prop trader focused on equities. And to be 100% honest with everyone, I didn't know too much about trading or markets. Everything I've learned at T3 over the course of the last 10 years. But I did understand that the key to this business was risk and money management right away. So when I was a new trader, I made rules for myself. I was really disciplined in how I followed those rules, and it enabled me to have some success more or less from the beginning of my career. And then as I saw what I was doing was consistent, and as I learned more, I worked on scaling things up. It wasn't until 2013 that I had the opportunity to actually start working with and managing traders. So 2013 was the year that I kind of started my own trading desk, if you will. And over the last 7 years, I've mentored well over 100 professional traders for the firm, and I have developed a really strong group of traders that I'm currently working with now. Guys, some of them have experience trading for decades, former pit traders, former floor traders, all the way down to others who are entry-level traders just like how I was. And separately from that, my entire life I've been involved in martial arts. For about 25 years now. 25 years? How old am I? No, sorry, 30 years now. I've been involved in martial arts. I've been teaching martial arts for about 20 years. I love to teach. I love working with people. And I think that part of the way that I was able to build such a strong group of professional traders that I have the pleasure of working with on a day-to-day basis is because I already had a lot of experience teaching martial arts. My youngest students are, 6, 7 years old. My oldest students are in their 70s. From people walking in the door for the first time, throwing their first boxing punch, their first straight right hand, all the way through, working with people who are competitors, amateur competitors, professional competitors. And I myself actually fought professionally for about 10 years or so. I had about 40 fights. I won 2 professional world titles in 2 weight classes, 160 pounds and 154 pounds. And then I retired from that sport a little over 2 years ago now. But that tells you a lot about me, to be honest. It tells you that I'm an extremely competitive person, which I am. And it also is where the root of my love of teaching comes from. And both of that has translated really well for me into the trading business. The level of discipline that was required to compete at the level that I competed at helped me become a significantly better, more disciplined trader. And having worked with people for so long, I think is what has really helped me to develop such a strong group of professional traders. I usually don't talk about myself this much on the webinar, but hopefully now everyone knows me a little bit better. So today, I'm going to be talking about charts, and then I'm going to be talking about T3. If anyone wants to reach out to me at any time, here's my email address. You can reach out to me to discuss trading with T3. You have, I hear that some of the retail accounts out there have been having a lot of problems. Ours have not been having a lot of problems. So if you want to reach out to me to learn more about a retail account with T3, the benefits of a retail account with T3, you can reach out to me. If you're interested in becoming a professional trader, reach out to me. If you want to talk markets, reach out to me. You want to learn about the education that we have to offer, reach out to me. Here's my contact info. Let's talk about charts. Let's talk about markets, because that's what I love to talk about. Let's go over to the SPY, the S&P 500. Guess what, guys? S&P 500. Let's look at the .SPX. All-time highs today. We made all-time highs in the S&P 500. The prior high was right here on February 19th at 3,393.52 cents. And today's high, 3,395.06 cents. We made new intraday all-time highs today. The question is, what happens next? Will it be a closing all-time high? I don't know the answers to those questions yet because I don't have a crystal ball. I can't read the future, but I know how to look at the market and this is the key to this business, with an eye towards risk, reward, and probability of success. I understand the technicals of the market. The technicals of the market tell me the broader supply and demand implications for everything that's going on. And what I can tell you about these technicals, going back to the SPYs here, is they are extremely bullish. You would think that all-time highs would act as resistance. And you know what? They honestly have. Look at how we paused. All of last week and the beginning of this week so far was a complete pause in front of all-time highs here in the marketplace. And that's just running into resistance. But what shows you how bullish we are, what shows you how strong the demand is for this marketplace, is that we did not have a real pullback off those all-time highs, off that potential resistance. All we have done is move sideways, time correct. On whatever this day is when we made highs, August 12th, the recent highs, we were a little bit extended there. The IWM had gotten a good bit extended as it approached 160, which the IWM is down 1% today. It's showing strong relative weakness. The NASDAQ, Qs here, is up 0.7% today. Same thing, a little bit overextended. So when the S&P hit that all-time high, it took a break. It went sideways. That's a bullish time consolidation for the marketplace. What that means is the market ran into an area where there was extra supply. Why would there be extra supply here? Because it makes sense. It's all-time highs. You know, if you've been long from anywhere since the March bottom, you might see all-time highs as a good place to book profits. Maybe some investors out there, and this is never what we encourage, have positions from pre-crisis, and they're seeing their portfolio get back to highs, and they're saying, oh, I want to sell some. That's not how professionals trade, by the way. That's how retail traders trade. What a retail trader will do a lot of times is they'll buy a stock because they think they like it. If the position goes against them, they just will hold that position. Oh, I'm just going to hold this position until it gets back to my price. Now, please, I hope it gets back to my price. If it ever gets back to my price, I promise I'll sell it. I just don't want to take a loss. And then maybe the position gets back to their price and they sell it. That's called unlimited risk for zero reward. You risked it going to potentially zero just to sell it at break even. Unlimited risk for zero reward. That's the opposite of how a professional trader trades. But that is how a lot of people approach the market who are maybe not as sophisticated. So it makes sense here that there would be overhead supply, excess supply in the marketplace in front of all-time highs. And a lot of times excess supply can cause the market to actually go down. But that's not what happened here because demand is so strong. So as the market ran into this overhead supply, the demand was there. They actually seemed to have caught some sort of equilibrium for a little bit here over the course of the last week. And that's why the price action's gotten so tight. That's why it's rested here in front of all-time highs. So what's going on here is the demand is slowly eating away at the overhead supply. And then, should that overhead supply become diminished and that demand remains strong, eventually what you'll see is a break higher of this pattern. It's like a bull flag pattern. It's basically how it works. And then maybe we can see even further upside continuation. And honestly, that's what we're looking for at this point. You can point to all of the bearish stories out there and why the market shouldn't be up here based on those stories. The economy is not the stock market. Because the fact of the matter is, there is a ton of cash lying around. There's a ton of cash lying around. The funds, so what we do as professionals, what we do in my team is we're constantly looking at and assessing money flow in the market. So we want to know who's overinvested. We want to know who's overinvested. And the statistics are just showing there's still a lot of cash on the sidelines. A lot of the hedge funds have been caught short. They could still cover their positions, which could bring us up higher, let alone if they flip to the long side. So a lot of people have been talking lately about the market maybe being a little bubbly or a little bit frothy just because of all the retail money that's gotten involved in it. There's that age-old expression and saying about the shoe shine boy. I think that goes back to like the 1920s or 1930s, maybe the days of Jesse Livermore, where when the shoe shine boy starts giving you stock market tips, that means you should get out of the market because there's no one left to buy. And there's been a lot of chatter about how we're seeing that right now. I'm sure everyone has seen the numbers on how many new Robinhood accounts there were over the course of the last couple months. Tons of them. Everyone's at home day trading. I heard anecdotally a story about a plumber coming over and talking about wanting to talk about stocks. The plumber. So you're seeing those kind of stories again. But the thing about it is, market peaks occur a lot of times when there's no one left to buy, and that old adage of the shoe shine boy. The idea behind it is that there's no one left to buy. But we're not really seeing that yet at these levels. The institutional money still has a lot of cash on the sidelines, still has shorts. That money could still potentially flow into the market. There is the potential of some volatility starting to come back to the market next week. Gamma, which is something that we look at, dealer gamma, is going to loosen up a little bit, which can create higher volatility. There's also some seasonality effects into the end of August. I mean, generally, summer trading, the second half of August in particular, is when volume declines. It is when the market tightens up. It is when price action becomes a little bit choppier. And that is definitely what we've been seeing on an intraday basis as well. But overall, this market's showing us that it can still go higher. The technicals look bullish. Look, a lot of people on my team, and honestly even including myself, really want to get short. I want to get short. But I can't just short. I can't just see this market right here at SPY 338.45 and press the short button and expect to make money from it. I might have to endure a lot of pain. Will the market ever go back down? Yes. At some point there's going to be some sort of correction or something like that. When will that come? I don't know. There's no technical signal for it right now at all whatsoever. And that's what you need to wait for. The thing about short selling, and this is something I've been consistently emphasizing to my team the past couple weeks, and honestly for my own benefit as much as for anybody else, because of just kind of how the market's been right now. With the macro stories are so negative on a day-to-day basis, it makes you really want to short. But the thing about short selling is you don't need to be first. You don't need to catch the absolute top. Let's say hypothetically we had whatever real is. We had a decent market correction. Let's say we just corrected back down to 320. And I don't think that's asking for too much. 320 is where we were less than a month ago. We've gone $18 since then. We've been in this August grind higher. Let's say hypothetically we corrected down to 320. I'm not even talking about a correction down to this previous support of 300 or a real deeper pullback, which all these are, potential possible scenarios. A much deeper pullback because, take your pick. China-U.S. relations are, not going well. The U.S. government is, struggling to get a deal done. Unemployment is, there's 13 million people unemployed or whatever it is. Pick your story, whatever. I'm not even talking about a big dip in the market. Just a little pullback to 320. If that happens, I don't need to be short from this price right now, 338.42. And I would say it would be irresponsible for me to attempt to even short at this price, because there's no technical signal. The thing about down markets, when markets go down, they tend to go down much faster than they go up. And the underlying reason behind that is because fear is a stronger emotion than greed. So if this market pulls back to $300, whatever, something like that, I don't need to be short from 338.42. The market will go down very fast. It'll trend down. It'll have momentum down. There will be plenty of intraday signals that can tell me that I can get short and that I can ride those shorter term, intermediate term downtrends on this market. And that signal is not there at all whatsoever. So if you're reading the news every morning, I almost feel like I should sleep in later. This is something I said in my afternoon meeting, I think yesterday, the day before yesterday, to my team. I was like, I'm working too hard. I get up. I'm in Wyoming right now. It's beautiful out here. I get up at 3:30 in the morning every day, Wyoming time, because I'm staying on Eastern time because the market really runs on Eastern time. And I'm from New York, but I'm out here in Wyoming for a while because why not? It's the beauty of being a trader is you can do this from anywhere. So I'm staying on New York time. So I'm waking up 3:30 in the morning, 5:30 Eastern time, doing a whole bunch of research before our morning meeting every day at 9 a.m. And I asked my team yesterday, I'm like, why am I even doing that? Why am I doing this research right now? All I'm doing is reading these negative news articles every day about everything that's wrong, about how schools might not be able to reopen, and if schools can't reopen, then parents aren't going to be able to go back to work because they got to stay home and they got to watch the kids, and how terrible that could be for the economy. But if there's no signal from the market, there's no short. And I would almost be better off not doing any research right now and just being in a little Wyoming vacuum and just purely understanding these technicals. Because honestly, any market-related short that I've tried to put on this month has been a break-even or a loser. There's been individual stocks, I could talk about that. The concept of relative strength and relative weakness is so important. If you are long relative strength and short relative weakness, you're still getting paid. There's plenty of things we could be short. Yesterday, I think the NASDAQ was up 1.25% or something like that. But you had American Airlines get smoked. Look at yesterday's red candle. Airlines got totally obliterated yesterday. UAL, smoked. Cruises, smoked. Casinos, they had a little afternoon rally. Let's go to a 5-minute chart from yesterday. But here's a 5-minute chart from yesterday. Beginning of the day, smoked. Continuation, weakness today. MGM down 2.5% right now as I'm having this conversation. My best name yesterday, my best trade yesterday, within the confines of the S&P, the NASDAQ, and the IWM all being positive, my best trade yesterday was short. My best trade yesterday, highest P&L, was Lyft to the short side. I had been short this thing since its earnings. I've continued to work it. A lot of times the way that I trade, I both swing trade and I day trade. So a lot of times I'll have a swing trade on that I'll actively day trade around. That's basically what I did here. Lyft had its earnings report on this day. The numbers were not fantastic. There was a technical short here through 29.50. I cheated it a little bit. I started a little bit above 29.50. I had a sell stop as a momentum trade to get heavier through 29.50, and I worked that as a 3-day trade. I exited the position yesterday when it basically hit my target, I don't know, somewhere around $27. And that was a beautiful 3-day trade. So my best trade yesterday was actually to the short side. So there are individual names out there. You can make money to the short side right now, but if you are trying to be short much more broader than that, you're trying to have a portfolio of short names, or you're trying to short any of these indices, the signal's not there right now. Keep it in the back of your brain. Keep your research on the things that are wrong there in the back of your brain. But the fact of the matter is, the technicals on the S&P, the NASDAQ, and the Russell are all extremely bullish. There's a lot of cash on the sidelines. And then, another bullish story, I don't know if people saw this last week. Apple did a bond sale last week. Apple sold $5.5 billion, I think the number is, in bonds at ridiculously low interest rates. They issued a 40-year at I think like 1.1% or 1.2%, something like that. Apple doesn't need cash right now. Apple does not need the cash. They already have more cash than most countries. So why would Apple do that? Because they can. Because money is free for stocks like this, for companies like Apple. And what is Apple going to do with that $5.5 billion that they don't need? Well, most likely dividends and buybacks. And if they're buying back their stock, I think Apple is it's 6%. I can't remember if it's 6% of the S&P or 6% of the NASDAQ. But regardless, that combination of the FANG names, or whatever acronym people are calling them now, of Apple, Facebook, Microsoft, Google, Amazon, there's such a large percentage of the S&P that if Apple decides to take $5.5 billion, and they're probably not going to use the whole thing towards buybacks, but if they decide to take $5.5 billion and buy it back to their stock, what is the effect of that on the S&P? So again, this is the bullish scenario. Money is free, and there's a lot of it out there right now. And the fund managers have it. The big companies have it. They're able to buy back their own stock. How is the S&P going to be able to have a sustained down move when Apple can raise money like that and buy back its own stock? It can't. It doesn't mean that we can't have a pullback. Again, I don't think it's completely irrational at all to see the SPYs pull back to 320. I'm not predicting that. Again, there's no signal for it. If the signal comes, I'm ready to hammer it. I'm ready to be all over it. I want to hammer the downside of this market so bad right now, but there's no signal for me to actually do so. So that's kind of the S&P right now. I mean, as far as individual trades go, this last week or so, it's really been a two-sided market, which has been cool. For individual equities, there's been money to be made on the short side and on the long side. Again, not necessarily markets, but individual equities. We already talked about the relatively weak names, right? Being short airlines, being short Boeing, being short casinos, being short cruises. All of that kind of continues to pay. And then on the long side, I mean, you can take advantage of big tech as well. This Apple earnings was monstrous. We caught the news after hours about the stock split that was going to happen when the price was $3.97. And then look at this trend. All you got to do is ride this trend. Look at this beautiful flag type pattern. Facebook, right? Same thing. Beautiful time correction of its earnings gap, followed by massive continuation on these 2 days, and now it's kind of taking a rest again. Amazon. We spoke about Amazon on our team yesterday and today about this beautiful bullish ascending triangle right now in Amazon. These are all names that you can be long to, and the technical pattern is there, and we know these companies are doing well, and they're probably going to continue to do well. I do not at this moment have positions in Amazon, Apple, or Facebook. I do have a position in Microsoft, which has been a little bit more still kind of in its price consolidation here. Same thing with Twitter, which I also do have a position on, as Twitter just cannot seem to get a close above 38. I think if it gets a close above 38, maybe it starts to get some legs beneath it. That's kind of what I'm looking for. Has been, again, a swing position that I'm kind of actively trading around. So those are really all the things I'm looking at right now. Generally what this market is telling you is that you still want to be long. And that's basically it. I'm happy to take questions as well. I see that there was already kind of one question. There's the chat here in the YouTube. People can post questions at any time. So we're still talking about charts. Someone here mentioned, looks like there's been a drop-off in volume. Well, you say vol. I'm not sure if you mean volatility or volume. Usually vol would imply volatility, but there's been a drop-off in both. There's been a massive drop-off in volatility, and there's been a massive drop-off in volume over the last week or so. That's normal for this time of year. It's also normal in grindy uptrends. And that's what we're experiencing right now is grindy uptrends. If you're talking about volume, I remember very specifically back in 2013. Let's go all the way back to 2013. The SPYs that year went up about 32%, if my memory serves me correctly, from a move of like 145 to a move of like 185. The high of that year after the 30% move, we didn't even touch that on the downside in the coronavirus correction. That just shows you how massive the S&P was. But I remember 2013, all the naysayers out there, oh, the up move's not on confirming volume. Volume is confirmation. That's how we utilize it on the team. That's how I talk about it. If you are looking at a trade and it has the appropriate volume pattern, it just means that you have a higher probability of success in that trade. Whereas if it's not there, it doesn't mean that the trade can't work. It just means that the probability of success there is a little bit lower. And again, it's not abnormal at all for volume to dry up both in this time of the year This is when a lot of fund managers are taking their vacation. They're probably not going to Italy because you can't fly there right now, but maybe working their way out to the Hamptons. So volume typically declines, and same thing. In these grindy uptrends, volume typically declines as well. So there's nothing really abnormal about that. If anything, there's a common saying in trading, never short a dull market, which is also true. This could just lead to just kind of a further continued grind up. And again, on that grind, you just want to be bullish. Where you want to get worried is if we start seeing real upside extension. Like if you look at Tesla right now, I told my team this morning, Tesla's had a great move here. It's gone parabolic again. It's gone parabolic multiple times. But when it gets this extended, when it gets this parabolic, I don't want to touch Tesla up here. I don't want to be the hero who's trying to short this thing because it's extended on the daily chart. And at the same time, I am not coming in and buying something that's this extended at this price. So this, if anything, when the markets get this extended, is a signal that you should be really cautious if you're long. Because usually what it's going to lead to at some point, and again, an extended stock, an extended market can always become more extended, especially when there's news or volume. Those are the principles there. But eventually it's going to have to correct. And it can correct through time, which is what happened last time, right? Went parabolic, got super extended, pulled back, and then had this basically 2-month time correction. Or it can correct through price, which means that price corrects all the way back down, similar to what it did all the way back in, well, this was still this year. It feels like forever ago, especially when you're looking at where the stock is now. But if you go back to February, Tesla went completely parabolic and then had a really deep, unnecessarily deep price correction. Does not have to be that deep from a technical perspective. So yeah, those are things to think about as far as markets go. Let's hop back to our slides here and talk about professional trading at T3 Trading Group, professional proprietary trading. So T3 Trading Group is an awesome company. I've been here for a decade now. I love what I do. I love markets. I'm not gonna lie. Sometimes trading is really stressful, and there's been times where there's been really incredible emotional highs and emotional lows over the course of my career, and even sometimes on a day-to-day basis. I try not to ever let my emotions affect my trading process. That's key. But I'm still a person. I still have them. But generally, T3 is a great company. I don't really have anything bad to say about it. I've been here for 10 years. One of the largest proprietary trading firms in the United States. We have over 500 licensed professional accounts. We've got 6 main offices, including our Manhattan headquarter office. That's typically where I work. Right now I'm working in Wyoming. I saw so many bison last weekend. It was incredible, an incredible animal. I saw these bighorn cows as well. I'm a city boy. I work out of the New York City office. I live in Manhattan. I'm the type of guy where I'm on vacation and I'm driving around and I see a cow on the side of the road. I'm like pulling over, taking pictures. So some of the wildlife I've been able to see out here is incredible. And again, one of the beauties about being a professional trader is you can really do this anywhere, provided you got solid internet. That was one of the things I really made sure to check before I drove out here with my wife to Wyoming, was to make sure that the internet was appropriate speeds so that I could still trade appropriately. And we have remote traders all across the country. My team, pre-COVID, probably, if I have 100 traders that I work with on a day-to-day basis, probably half of them would typically come into our Manhattan office, and the other half of them are remote who are spread throughout the country. So when the office is open, if you're in the New York area, you want to work with me in the office, you're more than welcome to. But we also have remote traders all throughout the country. T3 Trading Group is a licensed, registered SEC broker-dealer and member of FINRA, SIPC. All of our traders have to be professionally licensed. You have to pass the SIE exam, Security Industry Essentials. You have to pass the Series 57, which is the Professional Proprietary Traders Examination. We'll sponsor you for the test. We'll provide you with study materials. You'll have to pass a background check as well as part of the onboarding process. Once you pass the 57, usually the first thing I do is I'll start by allocating you a demo account. We have 3 major trading software options available: Lightspeed, Sterling Trader Pro, and WEX or Wolverine. Personally, I use and recommend Lightspeed. If you're interested in retail accounts with us, the only option is Sterling Trader Pro, which is also an excellent software. These are professional softwares, so they do take a little bit getting used to because it is professional. They're very robust, but you can have depth of market access. You have direct market access for your own trading. We don't sell anyone's orders out on our retail side or our prop side. Just about all of the retail brokers out there that you think are commission-free are not commission-free. I mean, technically they're commission-free, but there's a performance drag because they're selling out your orders to the HFT firms. We would never do that. You have direct market access. You want to place your order directly on the New York Stock Exchange, you can do that. We have equities, we have futures, we have equity options, we have futures on options. Personally, I'm an equity trader with the firm, but we have all this. Reach out to me if you're interested in any of those products. I can speak to you about it myself or have a member of my team or the appropriate person speak to you on it. And then, one of the biggest things here, I was actually just talking to the CEO of T3 earlier today, and we were really talking about the T3 advantage. And the big T3 advantage that we have that I don't think anyone else has is access to this team and access to training and access to meetings and access to development. And it's all for free. It's very hard to find businesses out there where the firm and the participants in that firm, if you're a retail trader, a customer, have their incentives in line. We do. If our traders are successful, then that's how the firm's going to make the most amount of money. If the trader is successful, the firm is successful. So we pride ourselves on the team that we have. We pride ourselves on providing education for free, on being there for team members. The morning meeting every day, the afternoon meeting each day. The morning meeting is about idea, information, research sharing. Everybody's really open-minded about sharing their own information, their research. The afternoon meeting is educational. It's a review of what the market did that day, but very specifically in that review, what I'm trying to do is draw out specific lessons, just like what I'm doing here with you all. Obviously, this is just a weekly webinar, so it's much broader. What I try to do very specifically in my afternoon meetings each day is draw out lessons from what the market did, from what individual equities did that a large percentage of the traders on the desk were involved in that day, that we can all learn from on a day-to-day basis, and it's going to make all of us, myself included, better. And I don't care what your level of experience is. You could be trading your first stock, or you could be a professional for 20 years. I am confident that you're going to improve your trading. You're going to learn more, learn to think outside the box more by working with us, because you're going to have access to all this, and our incentive is to make traders as successful as possible. On the prop trading side of our business, you will be required to commit a capital contribution to back your trading risk. What we typically do is we start by providing 20 times your capital for intraday trading and 8 times for overnight in terms of buying power, and then you are paid out on a percentage basis, percentage of your own profits. Again, we can talk about all the details. And that could be you're opening a $2 million account because you want access to $40 million, or you're opening up a $10,000 account because you want access to $200,000. We tend to want to work with bigger traders, but sometimes you start small and you build up. There's nothing wrong with being a smaller $10,000 account and building that account over time. And I've been with the firm for 10 years now. Maybe when you're here with the firm for 10 years, maybe that account that started as a $10,000 account, maybe it's $1 million account now. And this business is all about scale. Once you develop a system that's consistently profitable for yourself, it's all about adding scale onto it, and that's what T3 is able to do for you. Again, professional traders, experienced traders, really welcome with us as well. One of our biggest assets for experienced traders is our capital base. We're very well capitalized. Again, if you're a professional trader out there and you need buying power access, you want to come in with 2 million because you want access to 40, 50 million, we can make that work for you. What we are concerned about is risk. Capital access, we could, for the most part, we could give you as much as we want, up to maybe certain limits, but those limits are very high. So contact me. Oh, and again, all this free stuff you're going to get. Free pro trader room, that's my VTF room where I do my morning and afternoon meeting each day. You can get my training program classes for free. You can get Scott Redler's VTF room for free. You can get Redler All Access for free just by opening, a professional account with us, getting involved with us. So I don't know what you're waiting for. It's not necessarily meant to be a sales pitch, but I feel like I just sold myself. What this is meant to be is just educational for you guys. We can talk about markets on a day-to-day basis, how my team and I are viewing those markets, and just provide some information to you on the T3 advantage. And I don't know. I'm sold. T3 is great. If I didn't already have my account, I'd open one right now. So reach out to me. Here's my email address. I'm jumping back to my positions. It's been a great trading session for myself so far today. So I'm excited to get back at it. Anybody has any questions about anything, here's my email address. Reach out to me. Have a beautiful day, everybody.